Hey guys, welcome back to Andrew Invest. Today I want to talk to you about Crocs. So I've got a small position in the stock myself, and I've been following the results pretty earnestly. I've got a lot of thoughts about the topic, and I'm pretty happy with the results. So the stock was actually up nearly 10% earlier in the day, and it closed at about 4% up on the day. Now with everything else in the market down, you can't really hope for more than that. So without further ado, let's get straight into the analysis. Before I take you through the investor presentation which Crocs has provided, let me show you the headline figures for revenue and earnings per share for Crocs and how they compare against what analysts were predicting for them to get in Q4 of last year. Now, this clip here actually summarizes it quite well in about 10 seconds, so let me quickly show you this.
Crocs stock is rocking today. The footwear maker churning out record 2022 revenues, sidestepping the post-pandemic drop seen by other at-home products. Crocs.
Right. So Crocs, as you can see, beat on both revenue and earnings per share, and specifically earnings per share by a large amount. In a current macroeconomic environment where growth is quite hard to find and most growth stocks are dropping in growth and dropping in price as well, Crocs is bucking the trend with massive revenue growth and massive earnings per share growth. Now, that's what I like to see in a company. So having discussed that, let's take you straight into the investor presentation itself, and we'll kick it off with a quote from the CEO, Andrew Rees, about the performance of Crocs in 2022 and its anticipations for 2023. So, consumer demand for the Crocs and Hey Dude brands has been exceptional, fueling record 2022 revenues for both brands at a combined $3.6 billion and top-tier adjusted operating margin of 28%. We anticipate another record year in 2023, with growth expected to be led by sandals and international for the Crocs brand and increased US market penetration for Hey Dude. So for those of you who aren't aware, Hey Dude was a major acquisition by Crocs in 2022, where they spent nearly $2 billion purchasing the brand. We can actually see that in the figures here, where Crocs' debt figures went up from $700 million at the end of 2021 to $2.8 billion at the end of the first quarter 2022. Now, with a purchase that size, you would hope that the Hey Dude brand is performing really well. Now, is that the case? We can see that here in the next figure, in the next page, where we can see the breakdown in the revenue numbers for Crocs versus Hey Dude. Now, obviously, the majority of revenue produced by the company comes from the classic Crocs brand, and a lesser portion is from Hey Dude. However, we can see a lot more growth from the Hey Dude brand than the Crocs, with it growing at nearly twice the rate of Crocs. So that's pretty impressive in itself. We can actually see the performance of Hey Dude in a little bit more depth if we go to page 29, where we can see, in addition to the revenue growth of 34%, there was also a massive increase in brand awareness from Q2 to Q4 of 53%. Now, that doesn't come cheap. I'm sure Crocs spent a large amount on advertisement spending, as we can see here, and also probably had to pay a lot of influencers to wear these shoes in order to increase that brand awareness. It doesn't come out of nowhere, and it doesn't come for free. But it's paid off with its, with the revenue growth increasing that much, and with more people wearing it, and hopefully the shoes becoming more fashionable, it may have even better prospects for 2023. The one thing about Hey Dude that I would say is slightly poor compared to Crocs is that the operating margin and the gross margin is a lot less. Now, whether that's because of all of the advertising spending or because of the cost of producing the shoes themselves, I'm not 100% sure, but that's something to keep an eye on. So Hey Dude here has a operating margin of 27.7%. If we compare that to Crocs' operating margin, that's 31.9%. So a decent amount higher. And that's also the same for the gross margin as well, although they're not shown on page 29 for Hey Dude. If we look now quickly at the Crocs brand performance, we can see that the revenues were up 17%, and that the North American sales were up by 13%, whereas the rest of the world, they were up by a huge amount higher, 76 in Europe and 75% in Asia. We can see the operating and gross margin of Crocs decreasing by a significant amount compared to the previous year, down 7.6% for gross margin and down 5.5% for operating margin. Now, that's explained here due to 340 basis points, so 3.4% hit for promotions, 1.8% inflationary costs, and 1.8% freight and inventory handling costs. Currency also impacted gross margin, but we can neglect that one as currency is always changing, it's always fluctuating. Now, this is one of the risks of Crocs. Spending on things like promotions and advertising has to go up in the face of fierce competition from rivals who are introducing similar clog brands and trying to capitalize on, the Crocs popularity. Now, I was actually shopping on the Adidas website recently, and I saw these clogs, which I don't know whether they're as fashionable. My girlfriend says they're not, but you can see that other brands are really trying to cash in. With all that was said about the debt that was required to purchase Hey Dude, why don't we have a look into what the company is doing about that debt? And we can see that on page 34. So the company obviously acquired a huge amount of debt. It leveraged up to 3.1 times earnings in order to buy Hey Dude. Now, the company has actually been lowering that debt gradually, quarter by quarter, paying off 100 million at a time, and that's slowly going down, and it's one of the main risks for the company, so it's good to see that happening. Now, Crocs here has basically said that they are committed to having less than two times leverage by mid-year 2023. Once that happens, they're saying that share repurchases will restart again. Now, share repurchases is not something I necessarily want to see, even with gross debt coming down to 2 times leverage. I'd much rather see the debt come down to 1 times leverage, to be honest. But at least they've got a plan for paying it down, and it looks like so far they've been successful in doing so, and hopefully they will continue to do that. So we know that Crocs' debt plan is going to plan and going to schedule so far, at least. And we also know that Hey Dude's brand awareness is supposedly up 53%. Now, is that actually the case? So one thing I like to use to measure brand awareness is this Piper Sandler semi-annual Taking Stock with Teens survey. So this basically surveys a bunch of teens from the US and asks them what their favorite brands are and what they are, in possession of the most. Now, if we look here, we can see that Crocs actually increased its popularity to the number 5 preferred footwear brand, and Hey Dude moved from number 9 to number 7. That's a pretty significant increase, and the advertising money has clearly been spent pretty well. Although, if you look at the numbers, Nike is by far the biggest, the most popular footwear brand, and Crocs is a lot lower than that. But that's not the worst thing. It just means that Crocs and Hey Dude has a huge amount of potential to expand, whereas Nike has a lot to lose if it drops any further from there. Now, this survey was taken in autumn 2022. It's a semi-annual one, so I'm sure the next one isn't that far off. So it'll actually be really interesting to see if Crocs can pick up another, go up to number 4, or if Hey Dude can maybe break into that top 5. I think that would be very telling. Now, obviously, this is only for teens, but often teen fashion drives, older generations as well. So I think it's really important to keep an eye on this. With all of that said, what does the future hold for Crocs as a company? I don't have a crystal ball, and neither does anyone else, but the company has provided some good predictions for its future, and it's probably the one best place to know what's going to happen. We can see that here on page 32 with the guidance for 2023. There's a projection of 27 to 30% growth for Q1 2023, and for the full year 2023, 10 to 13% revenue growth. So it's expecting a bit of a slowdown in the growth later on in the year, and we can also see that Hey Dude is expected to grow at a significantly higher rate than the Crocs brand itself. Now, that's not surprising to me. Earlier on in the report, we saw that American growth in the Crocs brand has pretty much stalled, but European and Asian expansion in the brand is still rapidly increasing. However, as always, the US is where most of the money is for most brands, and Hey Dude has a lot more room to grow in that market since it's a lot less well known, I would say. Now, if we look at the operating margin, it's expected to be in the mid-20s, around there, and we can also see there is a further increase in the diluted earnings per share. So all of this is really positive for the stock, and I think that 2023 will be another positive one for Crocs. Now, if we look at the price to earnings multiple of the stock, this hasn't taken into account the Q4 figures, but the forward PE figures for Crocs is less than 10. It's priced at such a low multiple that I think this stock is a really good buy. The main risk for it is, Crocs going out of fashion. That happened 10, 15 years ago, and the stock was pummeled. Now, that's a possibility, although I do think this time things are different. The brand has such a foothold in the Gen Z generation, and it is really expanding with this Hey Dude acquisition as well. I really think that Crocs is one to watch for 2023, and I may be adding to my position myself. Thank you for watching the video. I really hope that I provided some kind of insight that you guys weren't aware of already, or that I helped to summarize the report without you guys having to look through the entire thing yourself. And if you did enjoy the video, please like it and subscribe. Thank you for watching, and peace out.